Hey everyone, and welcome to today's Explainer. I am so excited you're here because we are looking at a truly historic moment in global finance. Today, we're putting a laser focus on Mitsubishi UFJ Financial Group, better known to most of us as MUFG. They're Japan's largest bank, and they've just emerged from years, actually literally decades, of massive macroeconomic headwinds. For decades, Japanese banks operated in an environment that made growth nearly impossible. But the tide hasn't just turned, it has completely transformed the landscape.
Okay, let's dive into this. $250 billion. That is MUFG's current market capitalization. And what's absolutely fascinating about this number is that in July of this year, this massive valuation actually pushed MUFG past Toyota to become Japan's most valuable company. I mean, think about that for a second. Toyota builds millions of physical cars for the entire globe, but right now, the market is placing its biggest bets on a bank that just moves money. Why? Well, because MUFG is the ultimate interest rate play in a rapidly changing Japan.
It all comes down to the Bank of Japan's monetary policy. That is the engine here. For years, rates were ultra low, sometimes even negative. Now that they're finally rising, MUFG is positioned perfectly to catch the wave. Just a tiny 0.25% hike in the Bank of Japan's policy rate inflates MUFG's earnings by roughly 100 billion yen in the first year alone. That kind of massive leverage to rising rates is, for sure, the single most important factor driving their recent performance.
So here is our roadmap for today's Explainer. 1. A new world with interest. 2. Record-breaking financial growth. 3. Strategies beyond just banking. 4. Risks and capital challenges. And 5. The final investment verdict.
All right, let's jump right into part 1, a new world with interest.
Things have accelerated incredibly fast here. Like we mentioned, for decades, Japanese banks were just suffocating under ultra-low and negative interest rates. It is incredibly hard for a bank to make money when money itself basically costs nothing to borrow. But look at this shift. Early 2026 hits, the Bank of Japan ends negative rates, and the entire financial ecosystem just wakes up. Fast forward to July of the same year, and boom, MUFG rockets up to become Japan's most valuable company. They aren't just participating in this new world with interest, they are arguably the absolute best positioned institution in the entire country to capitalize on it.
Moving on to part 2, record-breaking financial growth.
Let's look at the hard numbers to see exactly how this macro shift is impacting their bottom line. For the full fiscal year 2025, MUFG reported a record-breaking net profit of over 2.4 trillion yen. And that was not a fluke, guys. It was their third consecutive year of record highs. It was driven by a really steady increase in net operating profit from their core business, plus a massive contribution from their equity method investee, Morgan Stanley. Management is so confident in this momentum that they've set the fiscal year 2026 target even higher, aiming for a new record of 2.7 trillion yen. That's a jump of over 10% from the record they literally just achieved.
And you know what? They're already proving they can hit those ambitious targets. Right out of the gate in the first quarter of fiscal year 2026, profits attributable to owners of the parent surged a staggering 48.2% year-over-year to over 809 billion yen. On top of that, ordinary income grew by 20.1%. So the momentum is absolutely not slowing down. If anything, it's speeding up as these interest rate hikes begin to really filter through their massive loan and deposit books.
Which brings us to part 3, strategies beyond just banking.
So how exactly does an institution of this sheer size maintain this kind of historic momentum? Well, they have a very clear internal playbook. Step 1 is the core engine, right? Growing net interest income. They've forecasted significant growth here, targeting around 80 billion yen in gross profit contributions from both their domestic and overseas loans. Step 2 is a massive pivot toward technology with a new Google AI partnership. And Step 3 is an aggressive optimization of their balance sheet by reducing equity holdings. Let's look a bit closer at those last two.
A really key pillar of this tech pivot is something called agentic commerce. Back in May, MUFG announced a strategic partnership with Google Cloud. And this isn't just about, upgrading their internal software or tweaking an app. They are building a next-generation payment infrastructure centered around an AI-driven ecosystem. In this system, artificial intelligence agents actually support consumers, guiding them from the very first moment they select a product all the way through to the final payment. It's a brilliant move that illustrates how MUFG is pushing to secure a dominant position right at the heart of the new AI economy. They are proving they are much, much more than just a legacy bank.
Now, alongside that tech innovation, they're also doing some intense financial housekeeping. MUFG has set a target to sell off approximately 700 billion yen in domestic cross-shareholdings.
By reducing these traditional equity holdings, management is proactively unlocking trapped value. It frees up vital capital and dramatically improves the overall efficiency of their balance sheet, which is exactly what ensures they have the agility to invest in huge projects like that Google partnership.
Let's get into part 4, risks and capital challenges.
Okay, we need to talk about the primary tension inside MUFG right now, because it's not all just blue skies. On one side, ambitious growth has pushed their return on equity, or ROE target, from 9% up to roughly 12%. That signals some massive structural profitability upgrades. But on the flip side, we are seeing the true cost of that growth, capital strain. The bank's CET1 ratio, which, if you remember, is a crucial measure of financial strength under Basel III standards, actually fell below its target range, down to 9.2%. So while profits are soaring, their actual capital buffer has definitely taken a hit.
Let's break down these specific risks a bit more. First, from a valuation standpoint, a lot of the good news we just talked about, it's already priced in. The PE ratio is sitting around 20, the yield is about 2.5%, and the analyst consensus right now is actually just a hold. It's no longer a deep value, hidden gem kind of play. Macro-wise, that incredible 2.7 trillion yen profit target explicitly assumes the Bank of Japan will hike rates to approximately 1% within the fiscal year. If the BOJ delays, or if global uncertainties like Middle East risks end up affecting their Asian partner banks, well, that forecast is in real danger. Finally, looking at capital, that drop in the CET1 ratio we just discussed was heavily driven by a large investment in India's Shriram Finance and a surge in lending. To patch this, management had to issue a very conservative share buyback of only 100 billion yen for the first half of the year as they actively scrambled to rebuild that capital buffer.
Finally, Part 5, the final investment verdict.
As analysts have rightly pointed out, the stock's recent ascent means the margin for error is now much smaller. MUFG is executing beautifully on a classic interest rate play in a highly favorable environment. But because the market has already rewarded them with a $250 billion valuation, there is practically zero room for mistakes. If you believe the Bank of Japan will steadily continue its path of rate hikes, MUFG absolutely remains a primary beneficiary. But you absolutely must actively monitor their capital management and the broader global macro environment.
Which leaves us with this final, provocative thought. As the Bank of Japan plots its next move in this brand new world with interest, is MUFG's historic record-breaking run just getting started? Or, with a PE of 20 and a shrinking capital buffer, is all that future success already completely priced into the stock? It is a fascinating dynamic to watch unfold at the very top of Japan's corporate ladder. Thank you so much for hanging out with me to unpack this complex topic today. Keep studying, keep asking the right questions, and I will see you all in the next explainer.